Our next topic is exemption from capital gain as suggested by our friend Nishita. So what are all the exemptions available if you have a short-term or long-term capital gain? So here we can divide the entire topic into section 10 exemptions available or deductions available and section 54 exemptions available. So here section 10 exemption is that there are two. This will not come under the purview of tax itself. That is exemption of capital gain on transfer of unit of a unit scheme. So once there is a sale or once there is a transfer of such units and you have a capital gain, such gains will not be under the ambit of tax. The second category is compulsory acquisition of agricultural lands situated within specified urban limits. So again, there will be no tax at all. This will not form part of your gross total income as such. Next is series of section 54 exemptions. First is section 54. Section 54 is on sale of residential house and it should be a long-term capital asset. It is available only for individual and HUF. So section 54 is where you have invested in a residential sale or from the proceeds of sale of residential house. What are all the further conditions applicable on this? Take two categories now. For a long-term capital gain, more than 2 crores and a long-term capital gain, less than 2 crores. We have time limits available for investment. That is, for claiming exemption under section 54, you will have to follow these timelines. So within 1 year from the transfer, or 1 year before transfer of the first residential property, you should have purchased another residential property. Say on May 2019, you have sold this residential house. However, in August 2018, you have already purchased another. So that house, whatever investment has been made in that house can be availed as an exemption under section 54 for this purpose, or 2 years after the sale. So the same date, May 2019, within May 2021, you should have bought another property. However, within the due date for filing of return, if it is not spent, you should have deposited the money in capital gain account scheme. The third, 1, 2, and the third year. So there are 3 time limits, of which the final one, 3 years, is for construction after. So the same May 2019, there has been a sale. So within May 22, you should have constructed a property. Again, there are limits on the number of residential property. If your capital gain is more than 2 crores, then only 1 residential property is available for exemption. However, if there is long-term capital gain is less than 2 crores, then up to 2 residential property, investment in 2 residential properties are available as exemption. Next is section 54B. This is on capital gain on sale of agricultural land. Again, this is available only for individual and HUF. So what are all the conditions for it to be? Whatever we saw in the section 10 was that compulsory acquisition of an rural agricultural land. Here it's agricultural land used for agricultural purpose. So the conditions to be satisfied is that, say today is the date of sale, up to 2 years before, at least up to 2 years before, you should have used that land for agricultural purpose, and within 2 years from the date of sale, you have to purchase another agricultural land. So what are all the conditions, that is similar conditions between 54 and 54B. It is applicable for individual and HUF, and the sale and investment is on the same property. That is, for 54, you should have sold a residential property and bought a residential property. In 54B, you should have sold an agricultural land and bought an agricultural land. This is for 54B. Again, if not spent within the due date of filing return, that is say July or September, whatever is the due date, you should have deposited in CGAS account. Next is 54D. Capital gains on sale of land and building of an industrial undertaking by the way of a compulsory acquisition. So the condition here is, so 54D has a difference from the other two sections. It is applicable to any type of assessee. However, it has a similarity between 54B and 54D is that 2 years before the sale, it should be used for the purpose it is intended to. That is, for 54B, it should be used for agricultural purpose. In case of 54D, it should have been used for business purpose of an industrial undertaking. Then after 3 years, so this is a different threshold from 54B. So from the sale of property or from the transfer of property, 3 years you have to purchase the same kind of property, that is land or building of an industrial undertaking used for business purpose. So there should be from the transfer of property. So now here we have seen 3 sections. So of the 3 sections, if you have sold the property which has been acquired within 3 years from the date of acquisition, say here within 3 years you have acquired another industrial undertaking, in the before section 54B you have obtained an agricultural land. In case of residential property, again you have bought one more property, then you should not alienate the asset within 3 years from the date of purchase. Otherwise, the same will be subject to capital gain. Even the amount of exemption will be subject to capital gain. The formula shall be the sale consideration. Whatever value you have sold the new property minus cost of acquisition. The value you have obtained the same minus from the cost of acquisition, you have to subtract the amount of capital gains exempted during this calculation, which that is the capital gain portion, which is now exempted, will also be subject to tax in the subsequent cases. So as of now, whatever we saw is only for long-term capital gain asset, except for 54B and 54D. So we have seen 3 sections, out of which only one has the condition of long-term capital asset. 54B and 54D exemption is available even for short-term capital gain. And the one exclusion from other 2 sections is that 54D is applicable for any kind of assessee. Next is 54EC. Here you have sold the land, building, or both. So it's available only for land and building or both sold together. This is applicable even for deemed long-term capital asset. So what do we mean here by long-term capital asset? Say a building on which depreciation has been calculated, it is always a short-term, whereas for any asset on which this thing is calculated, depreciation is calculated, it is short term. It is calculated on the basis of short term capital gain. However, if you see here, even on that asset which is held for more than 36 months, that is an asset on which you have calculated depreciation, and again it has been held for more than 36 months, even that will be deemed to be a long-term capital asset for this calculation of 54EC here. Again, this is available for all the assessees. Maximum amount of deduction available under this section is 54EC. Say you have sold an asset today, that is land and building, within 6 months from the date of sale, you should have obtained or you should have bought these bonds, the 3 bonds, whichever is available for exemption here. National Highway Authorities of India, Rural Electrification Corporation Limited, or any other bond that has been notified by central government. So say you should have a 5-year lock-in period for this. So it should be redeemable only after 5 years from the date of purchase. And during this 5 years, you shall not transfer such bonds obtained or use this as a security for any advance to be obtained. So if there is any lapse in this condition in the same year, you will be subject to capital gain. Even the exempted portion will be taxed in that year of lapse. 54 EE is kind of same to 54 EC. This also deals with the purchase of notified bonds, and the conditions of 6 months, 50 lakhs and 5 years are all the same, and it is available for any assessee. So the only condition that is different between 54 EC and 54 EE is that 54 EC is available only for sale of land, building or both. However, for 50 EE, any long-term asset, sale of any long-term asset is available. For exemption, 54F, capital gain on sale of other than residential property. That is, say you have sold a land, but the investment should be in residential property. Only then this is available. So it is available only for individuals or HUF. Again, it is eligible only for long-term capital asset. Here, when your investment is more than the long-term capital gain, entire capital gain will be exempted. However, if your investment, say your capital gain is 2 crores, however, you have invested only 1 crore in a new property, then this formula should be applied. Long-term capital gain into amount invested in the new property by net sale consideration. So, summing up the entire discussion. So now there are two kinds of exemptions available. So one is under section 10, the other is under section 54. So if we take 10, only two kinds of deductions are available. So if you take 10, only two, sale of unit and compulsory acquisition of rural agricultural land. The next is section 54. There are series of deductions available. So of which on sale of residential property, you have three kinds of deductions available. One is 54, the other is 54 EC, and the third is 54 EE. So first, 54 for section 54 deductions available, you should have bought another residential property. 54 EC is where there are three kinds of bonds notified. On purchase of these within 6 months from the date of transfer, exemptions will be available. Third is section 54 EE. So on investment again within 6 months on the specified funds, you have the same exemption available. So this is to sum up with sale of residential property. The second is 54B, where you take, so the next category would be on the purchase of same kind of property. So if you see 54, 54B and 54D, everything shall be the same. That is on purchase and on sale of asset, the same should be same. For 54, sale of residential property and even purchase should be of residential property. 54B says you have to sell an agricultural land, again you have to purchase an agricultural land. 54B shall be an building or land used for agricultural, business purpose in an industrial undertaking. So if you see again, available only to individual and HUFs, three sections, 54, 54B and 54F is available only to individuals. So it will be easy if you can do this kind of charts, or if you can do this memory tips for all the sections. Again, you can classify based on time limits. If you see 54 EC and 54 EE should be deposited within 6 months. Again, if you see 54 B and D, there should be again a purchase of the same kind of property within 2 and 3 years. Again, 2 years before that, you should have used it only for that purpose. So do make charts and make your studies fun and easy to understand. Thank you.